Welcome back to TakePropips. In today's video, we're diving into the top 3 reports that you need to understand if you're trading commodity-driven Forex pairs. Now, commodity-driven currencies are those that are heavily influenced by the price movements of certain commodities, like oil or gold. Think of pairs like AUD, USD, USD, CAD, or NZD, USD. Their value can fluctuate based on the performance of commodities like gold, oil, and agricultural products. If you're trading these pairs, you're going to want to stay on top of the right data, and that's where these reports come in handy. So let's break down the top 3 essential reports you should monitor. First up, we have the Commodity Futures Trading Commission's Commitment of Traders Report, or simply the COT report. This is one of the most valuable tools for Forex traders because it gives you an insight into what big institutional players are doing in the commodity markets. The COT report is released weekly and breaks down the positions held by different categories of traders, like commercial hedgers, large speculators, and small speculators. Why is this important? Well, the positions of these large institutions can give you clues about future price movements. For example, if you notice that commercial hedgers are heavily long on oil futures, that might be a signal that the price of oil is expected to rise. And since currencies like the Canadian dollar are highly correlated with oil prices, this could mean the USD, CAD might drop. Understanding the positioning in the commodities market can give you a heads up on possible movements in commodity-driven currency pairs. So make sure to keep an eye on the COT report and integrate it into your trading strategy. Our second report is the Energy Information Administration's AF Weekly Petroleum Status Report. Now, this one is absolutely crucial for traders keeping tabs on oil-driven pairs like USD, CAD. Every Wednesday, the EIA releases this report, which includes details on U.S. crude oil production, imports, and inventory levels. This data is a direct indicator of oil supply and demand, and any surprise changes can have an immediate impact on oil prices. Why does this matter for Forex traders? Let's say there's a sharp drop in U.S. crude oil inventories. That typically means demand is outpacing supply, which could push oil prices higher. For the USD-CAD pair, which is highly sensitive to oil prices, this could result in a strengthening Canadian dollar and a potential downtrend in USD-CAD. Monitoring the EIA's reports will help you stay ahead of such movements, giving you the edge you need in making informed trading decisions. Finally, let's talk about China's Trade Balance Report. This one might not seem obvious at first, but it's a game changer for anyone trading the Australian dollar or New Zealand dollar. Why? Because China is one of the largest consumers of commodities in the world, especially from Australia and New Zealand. Australia exports a significant amount of iron ore to China, and New Zealand exports dairy. So, when you're trading pairs like AUD, USD or NZD, USD, understanding the demand from China can give you critical insight into these currencies' movements. For example, if China reports a larger than expected trade surplus, it might indicate a higher demand for commodities, which is good news for commodity exporting countries like Australia and New Zealand. On the other hand, if there's a trade deficit or a decrease in imports, it could signal slowing economic activity in China, which might hurt the Australian and New Zealand dollars. Keeping an eye on China's trade balance can help you better time your entries and exits on these pairs. Now, those are the top 3 reports that you should have on your radar if you're trading commodity-driven currency pairs. But before we wrap up, let's not forget how crucial it is to manage all of this information efficiently. At TakePropips, we offer our Trading Management Solutions EA, a powerful tool that can help you stay on top of these reports by integrating them into your trading strategy. Our EA gives you access to features like the Currency Strength Meter, Trend Scanner, and Trade Manager, which can help you quickly assess how these reports impact your trades. For example, with the Currency Strength Meter, you can easily detect which currencies are gaining or losing strength based on the commodities they're tied to. Let's say the COT report shows large speculators increasing their long positions on oil. You can check the strength of the Canadian dollar using the meter and make a more informed decision on USD-CAD. Or, with our automated trade management tools, you can set up triggers to execute trades based on your analysis of the EIA's oil reports. With our EA, you're not just manually reacting to these reports. you're able to automate your trades and make sure you're always capitalizing on market movements. In summary, by using the Commitment of Traders Report, the EIA's Weekly Petroleum Status Report, and China's Trade Balance Report, you can gain valuable insights that will help you make smarter decisions when trading commodity-driven currency pairs. And with the help of TakePropips Trading Management Solutions EA, you'll be able to stay organized, automate your strategies, and trade more effectively. That's it for today's video. If you found this helpful, don't forget to like and subscribe to TakePropips, and hit that notification bell so you never miss out on our latest trading tips. Also, check out the link in the description to learn more about our Trading Management Solutions EA and how it can help take your trading to the next level. Thanks for watching, and happy trading.